Welcome to TheoTrade. This is Don Kaufman. Here we are. It is January 10th, 2018, doing the Theo Night video. Well, first and foremost, it looks like we're going to have a down trading day today. Hard to say this, but that is going to be the first of the year. And yes, it's January 10th. Looks like, again, we're going to have the first down day of the trading year. But there's still 17 minutes to see the dip buyers come back in. But that's not what's taking center stage today. That's not what's got my attention. People, it's the bonds. It's all right now about bonds. There's a little bit of news out of Japan, news out of China, and it really rocked the bond market. Let's get right to it here and display not only the bond market, because, a lot of people are thinking, well, I don't necessarily trade bonds. That is fine. We're actually going to show the impact the bond market can ultimately have on the broader equity market and specifically a few trades. With that, let's get right to it. The bonds on an intraday basis. Now, for those of you that do not look at bonds trade in ticks. There's 32 ticks. 32 ticks to a 1-point move. Bonds right now are down approximately 4 ticks. And again, what you're looking at happens to be some of the trade. And as I said, overnight, the bonds got absolutely decimated out of news, both out of policy, differentiation in China and Japan. The bonds get rocked. Throughout the course of the live session, though, the bonds picked back up to the 150. Now, why does this matter so much? Why are they on edge about it? The bonds clipping down to the 149 level. Okay, first of all, take a look at that volume. It's an extraordinarily high volume day inside of the bonds. There's no roll going on, nothing of the kind. So extraordinary volume. And again, we still have about 15 minutes left to the live trading session. So bonds get to this critical level. And in addition to it, okay, and bonds are kind of the retail friendly trade. In addition to it, the notes, and this is the 10-year, okay, the notes have been on a consistent slide to the downside, all right? What this in effect means is rising interest rates, okay? And a lot of this has to do with, the Fed and the Fed's punch bowl and the $4.5 trillion balance sheet not only being absorbed, but around the world, this idea of quantitative easing, it looks like a lot of the central bankers are starting to become a little bit more hawkish. And that is what kind of caused this big spike to the downside inside of the ZN and specifically the ZB. Now, the definitive impact over here, which we're going to mention momentarily, is again the rise in interest rates, which is going to have an impact on a lot of different sectors. But the question that really looms and what's really going to kind of tax markets in the days to come, this slide inside of the 10-year, the slide inside of the bonds themselves, okay, you got to start questioning, is this it? Is this the big one? Is this the move to the downside that, bond gurus have been talking about for literally 4 or 5 years? And specifically, when I say bond guru, I'm actually mentioning somebody like Bill Gross. Went from PIMCO ultimately to Janus. Nevertheless, he actually does believe at this point, that's it. Now, I am not necessarily in that camp believing that this is the big move. And when I say a big move, if the bonds continue to slide, interest rates will explode. With that, let's actually go over to the interest rate. Here, people, we are looking at the TNX. The TNX, if you're not familiar with this, first and foremost, this is not a tradable product. All it is again, it's the Treasury Index. It's the 10-year, okay, the yield, if you will, associated with those bonds. And you can see earlier today, got all the way up just shy of 2.6%. Now, I recognize on the screen it says 26. Nevertheless, that's to be read as, again, 2.6%. So if you look back anytime in the last 9 months, this is the highest interest rate we've actually seen associated with those bonds. Now, let's go back a little bit further in time over here. We'll even drop out to a 3-year weekly, and you start to get a feel why the market's getting a little bit tense about this. Again, we've had, once, twice, maybe the third time's the charm over here. Again, if rates explode to the upside, it's all over but the crying at that point. That could be initially positive for the financials, nevertheless negative. So in a situation like this, we're teetering right on the top of it. I think it's, appropriate at this point to look towards an ETF product that I believe will have a vast impact. Now, this one's got me kind of shocked over here because this happens to be the XHB. It's the home builder. Now, the home builders have still been appreciating substantially, even in the face of a rising interest rate environment. And that has bothered me nonstop. However, as we start to approach, in that 10-year, that like 3%, remember, right now we're at about 2.6%, right? So right now we're sitting right around 2.6%. This thing starts to creep up, okay, into that 3% range. That is very likely to snap the back of the XHB. One of the reasons the XHB is not backing off right now is because in the XHB, it's the home builder ETF, Home Depot resides in here. It's one of the primary holdings. And if you take a look at Home Depot, you'll realize real quick, you're like, wait, is that the same chart? No, it's not the same chart. This is the Home Depot chart. Home Depot ultimately charging to the upside. Nevertheless, where I am looking to consider the trade is going to be XHB. And I've actually executed a number of trades in XHB. Let me show you a variety of different trades. Number one, you could do what's called an in-out spread. Okay? What is effectively an in-out spread? Well, I'm going out there buying the 46 puts, selling the 44 puts for the next 44 days. The spread right now is pricing at 85 cents. Now, I filled a multitude of contracts a little bit earlier today for about 81 cents. Nevertheless, it's trading for about 85 cents. In this trade, what are you risking? Well, the max risk is the debit. It's 85 cents. What are you trying to make? About 55% of the 85 cents. Listen, I'm not trying to hit a home run over here. Okay, this is picking up nickels and dimes in front of a bulldozer. That's okay. This is taking the stab at the fact that in the next 44 days, okay, that the XHB will snap to the downside. Why would it snap to the downside? Interest rates picking up. Now, that's one trade that I took. The other trade that I took happened to be a duration position. What's a duration position? I actually purchased, and this is an IRA that I'm in, I purchased in the money puts. Why would I purchase in the money puts? Well, first of all, if I were able to purchase those puts, which I did for right around $3, the maximum risk I have is $3, and it's giving me about a 90 delta. So what that really means is a 90 delta is if the XHB moves down a buck, I'm going to make about 90 cents of that buck. It's a 90 delta, right? It's the rate of change of the option for every dollar increment move in the stock. But after a dollar move down, my 90 delta will probably become closer to a 1 delta, which this is a great way to get short in an IRA. It's a great way to get short in an IRA, and I'm doing it for 65 days. I can't lose more than $3. And quite frankly, I'll even extend this position by rolling the option further out. You got to ask yourself, why do people get short underlyings? This is a much cleaner, sharper way to do that. Those, again, they're two entirely different time frames. Similar positioning in that, okay, creating a bearish position with an in-out spread, which is a defined risk spread. Also creating a bearish position using what I would call a duration strategy, buying an in-the-money put. By the way, buying in the money put, it'll also allow me the ability, if I so select, to sell shorter duration options against that longer duration put. With that, well, enjoy the rest of the trading day. It finally looks like we're going to have a down day. But again, the day is far from over here with 8 minutes left to trade. Thanks, everybody, for joining us at TheoTrade. Have a wonderful evening. Bye-bye.